right, if there's one concern for organized diagnostic players, it is the competition from smaller and cheaper informal centers. While India offers a large retail base, listed players have been reliant on the insulated B2B segment. One of the formal players, Metropolis, listed on the bourses with aspirations of becoming a pan-India player. As the healthcare chain prepares to report its first quarterly earnings since listing, let's speak to the promoter and MD, Ameera Shah. Ms. Shah, thanks very much for taking out the time. Since we're talking about, how you're approaching growth in various segments, let's talk about the focal segments. That's the B2B and the B2C segment. What is the strategy going ahead?
So as we've talked about before, I think Metropolis's core strategy is to really focus on the retail side, on the B2C side, and to really penetrate deeply into the cities that we're already present in. So we've identified 5 cities which are really our current engines of profit. And we feel these are opportunities for us because while they are our current engines of profit, we haven't in the past penetrated these markets fully. And we feel this is a really low-hanging fruit for us. These are markets like Bombay, Chennai. These are large markets, large metros in India, where we have a strong brand, strong operational strength, and now good distribution. But we believe that we can get deeper and really enhance our market share in these markets. So that's definitely one of the core focuses of the company. We are seeing year to year our B2C ratio as a contribution to the total revenue increase, which is totally in line with our strategy, especially in these focus cities. And our goal is to really take it to close to about 60 to 65% in the focus cities in the next few years. On the B2B side, we really work with the top hospitals and top labs all across the country. I think there's more than 10,000 or 15,000 touch points where we pick up samples from and provide specialized tests and semi-specialized tests to these hospitals, nursing homes, and laboratories. And here the turnaround time, the service, the quality, your reputation, your credibility makes a big difference because you're doing very high-end specialized tests which require expertise. And even actually most hospitals don't have the expertise to do this, so they outsource these samples to us. While we are considered, very credible and big experts in pathology, really we have seen this demonstrated by the specialized test being the largest contribution in Metropolis compared to all our peer sets, where the specialized tests are almost, I think, 40% of our total revenue, specialized and super specialized, and of course semi-specialized another 30 or 35% on. So I think this ratio really increases our average revenue per sample, our average revenue per test, which we continue to see on an incline over the last few years. And I think this is quite exciting for us because it only demonstrates how the top hospitals and top labs in the country really trust us for their more specialized tests.
Right. Ms. Shah, previously you have communicated that you intend to take the share of revenue from the B2C segment northwards of 60% over the next 3 to 5 years. Is that on track?
So the idea was to increase it to 60 to 65% in the focus cities. And we're doing that by really increasing the number of collection centers we have in these cities and really going closer to the patient. One thing which is very important to the consumer is convenience because they've been used to going to a local unorganized lab near their home 5 minutes away and making it quick, giving their blood and leaving. The only difference was that when they're doing it with the unorganized sector, usually the infrastructure in general doesn't tend to be very high. There doesn't tend to be simple things like AC, comfort. Technology use is very low. Therefore, most of these patients don't get the reports on email. Safety and hygiene tends to be a concern for a lot of the patients on whether really good quality practices are being followed. And then, of course, the quality behind the scenes for the accuracy of the report. By opening a Metropolis collection center close to the patient's home, what we're doing is we're really giving the consumer an alternative option of having to choose between quality and convenience, and now we're giving them both. We're giving them the best global quality but close to their house with better infrastructure, great hygiene and safety for them, a great ambiance, ease of technology which gives them reports in a few hours through our mobile app or on their email, just making life very easy for the consumer without compromising quality at all.
What about pricing power then? Are you able to take any price hikes in such a competitive market?
So we really haven't taken many price hikes. We have taken very marginal price hikes over the last few years, much lower than the unorganized sector, and definitely much lower than what we used to between 2010 and 15. Really, our average realization per patient and per test is increasing more because we're moving up the value chain. It's less because of price and more because of us moving up the value chain in terms of the more specialized tests that Metropolis is getting. And that's really resulting in a higher realization. We will obviously look at price hikes at the right time. But at this point of time, we've always felt that, look, healthcare is something that we want to continue supporting patients, keep things affordable for people. And that's what we're doing currently.
All right, that's for the pricing. Let's talk about achieving optimal volume growth. How do you aim to achieve that?
That's right. Volume growth is growing well for us today. I wouldn't say that it's a volume-led growth. I think it's a combination of our revenue growth is a combination of a good amount, a very healthy volume, plus, like I said, the moving up the value chain, which means getting more and more specialized samples, which means the test mix change is happening, which gives us a higher revenue as well, plus a marginal price increase. And I think that's really the combination of these three is driving revenue for Metropolis. From a economics basis, of course, from a strategy basis, it's really geographical expansion as well as product offering. These are the two things that are driving growth and expansion.
All right. Also, let's talk about what kind of competition you're facing from hospitals. Is it substantial, or probably you don't think at this current point in time that's much of a deterrent for you?
So hospitals really are more focused on treatment, and they tend to be, hospitals tend to be treatment specialists, while pathology specialists like us tend to be more on the diagnosis side. Now, as we know, 70% of, treatment cases require diagnostics, and it's very essential that unless you don't get the right diagnosis, your treatment is going to go wrong. In some countries like South Africa, the government has made a decision not to allow hospitals to run their own path labs. The reason for that is because they think it's a conflict of interest, because the patient should be going there for treatment, and they don't want the hospitals to have any motivation to cause the patients to unnecessarily find things, diagnose them incorrectly or diagnose them too much in order for the treatment. So actually countries like South Africa have separated who does treatment and who does diagnostics. It's in countries like India where that separation has not happened yet. And we really see that while hospitals do their treatment very well, on the diagnosis side, it is not their expertise or their specialty, and therefore it makes more sense for them to rely on us to provide that for them, for their consumers, as well as for our consumers directly. Because, if you look at the kind of range of test menu that we have almost 4,000 varieties of tests and profiles in our test menu, while even a good quality hospital would have at the most 500 varieties of tests. Because the kind of technology you need, the kind of expertise you need, the kind of experience, the kind of logistics, the kind of distribution in terms of collection centers, hospitals are not able to do that because it's not their business and they don't have the know-how, which is why, like I said, they rely on us.
All right. Let's talk about the NACO contract win, and how much visibility of growth do you think that offers?
Metropolis is very selectively choosing to partner on certain PPPs with the government, either central or state, only on certain tenders where we believe our specialized services, our technology, our expertise are really valued. And one of the first tenders that we partnered with the government on is an NACO tender, which is a very prestigious tender because it was awarded mostly based on your expertise and your technical specification levels, and less based on your commercial abilities, which is unlike what happens in most, at least in some cases, in some healthcare PPPs. So therefore, we were very keen to do this partnership with the government, and it has been now more than a year. It's been a very successful program, I think, for both. It's been working very smoothly. And I think what's interesting about this project is that the government today in India is providing free HIV treatment to all patients all across the country, all HIV patients, which is approximately 4 million patients all over India. And the government in India has actually done extremely well, and NACO specifically, in lowering the amount of HIV incidents across the country. So they've contracted us to provide the diagnostics and all the kinds of testing required for these HIV patients all across the country. So it was a very complex project where across 530 centers all across India, we had to connect all the centers and provide diagnostics in a stipulated time with global quality in small markets of India, in areas which are very difficult to reach logistically. And we've managed to do this extremely well. I think this project has not only added a feather in the cap for Metropolis, but also from a financial perspective, we believe will be well financially viable for us, and we should land up making good returns from it.
Got that. Also, let's talk a little bit more about your growth strategy, your upcoming growth strategy, because up until now you've grown more via mergers and acquisitions. Is that a strategy that you stick by and you will continue to employ to keep sure that growth is on track?
Mergers and acquisitions are an important part of our strategy, but it's definitely not the primary strategy driving the company's growth. The primary strategy driving the company's growth is organic, where we are really expanding through an asset-light model all across the country, mostly via collection centers. If you actually see over the last 3 years, while our collection center network has expanded almost from 300 centers to almost 2,500 centers this year, there's been a 8x expansion in our collection center network. We have not had the same kind of expansion in the lab network. We've only had maybe a 20% increase in our lab network. The reason for that is because it works in a hub and spoke model, and you don't need that many production hubs if you're able to connect them well through logistics and technology. So what we've chosen to do is to keep it an asset-light model on the front end and only incrementally increase our back-end production and operations, because we were already very strong with our back-end and we did not need to increase too many more labs. So I think, as we are doing this, I think this organic growth is really driving the company's expansion and increasing our ROIC levels also because of the asset-light model. Mergers and acquisitions will be an important pillar for our strategy, and we would like to look at, doing at least important strategic acquisitions as we go ahead. If you look at the past, maybe 15 years, since 2004 till 2019, we've done approximately 20 to 25 M&A, and most of these have been strategic in nature to get into new markets with a consumer brand and to then really use it as a launching pad to establish ourselves in a new geography where we don't already have a significant consumer presence. And I think that will continue to be part of our strategy as we move forward as well. Metropolis has had a very successful track record with our M&A. We've gone on to do extremely well in terms of integrating these acquisitions and really growing them. Because it's easy to do a deal, but it's very hard to actually get a good return from it. And there's a certain kind of culture and a certain kind of expertise and experience that you need to be able to really make M&A successful. And I think we've proven that with our history. So we would like to continue using that lever as we move forward as well.
All right, Misha, my last question to you with regards to your geographical presence, considering that you're dominant right now in West and South. What's the focus geography going forward? Are you continuing to seek to become more pan-India?
Actually, we are present not only across India, but across a few other countries as well. And across India, we are present in about 210 cities, which includes not only the west and south of India, but also the north and east of India. It's just that the west and south of India have traditionally contributed more to the revenue and the profit. But the surprising and very interesting part for us is that today the other regions of India are actually some of the fastest growing markets for us, because the base is lower and we've really found a way to get into our competitors' territories and find a way to really make ourselves successful in these markets. Traditionally, there has been a hypothesis that healthcare is a very local, hyper-local, regional business, and you can only succeed in your home market. And I think Metropolis has proven otherwise by going into other markets of north and east of India and really showing that we're able to be successful in bastions of our competition's strength. And I think this is very exciting for us because it shows a huge opportunity moving forward, new growth engines for the future, and therefore we don't see the growth really stalling or stagnating as we move into the next few years. So we will, while we continue to get deeper into West and South of India, because there still is a huge amount of opportunity in the markets that we've been present in, and new markets in West and South, which we had not traditionally been present in, we continue to expand in the North and East of India, which we believe will also be very exciting for our future.
All right, Ms. Shah, we leave it at that. Thank you so very much for joining us this morning. So that is the management at Metropolis. Pretty confident about future growth engines, talking about mergers and acquisitions that could drive growth, focusing more, pan-India, not just their traditionally strong footholds in South and West.
Yep, and the stock is doing well for itself too. Moving on to next conversation. India's trade deficit narrowed in June as a slowing economy and lower oil prices curbed the import bill. But exports fell as much as the imports last month. This indicates the magnitude of the task for the government, which seeks to promote greater exports even as domestic industry shows little sign of revival. Weak global growth and Trump's demand on India to reduce trade surplus with the US are only going to cause further hiccups. So will it be wise for India to look inward rather than outward in a situation like this? Let's put that question to Chief Economist at CRISIL DK Joshi. We also need to talk to him about the other macro indicators that came out, both local and global. Mr. Joshi, good having you. Thanks so much for joining in. Normally we would cheer the fall in trade deficit. This time around it seems to be caused by a problem which could plague India for the near term, which is that growth is under a big question mark.
Well, I think there are two sets of factors playing out. I think globally, because the world economy is slowing, so the pie available to you for exports is shrinking. So you need to work harder to get more of that shrinking pie. And I think looks like in the labor-intensive segments like gems and textiles particularly, we are not doing that well. I think that's what the June data shows. And then I think there is one-off factor like fall in oil prices, reducing your export bill as well as your import bill. But I think overall, apart from that, I think there's another important factor that is having an impact on the trade deficit is this weakness in the economy. So when the growth is weak, you import less. And I think that is getting reflected in data as well. So it's a combination of global and domestic factors which have brought the trade deficit down, and particularly I think important is that the export growth has turned negative. I think it's been minus 9.7%, which is actually much weaker than what has been experienced in other economies. So that directionally it is correct, but I think the impact that India has seen is much stronger.
Okay, so the exports growth is looking weak. Mr. Joshi, the question then that comes to mind is that lower crude prices definitely help curb the import bill. If indeed, due to tensions between US and Iran or otherwise, if crude prices were to inch up, that would quickly put this shade better trade deficit into question mark again in the months to come.
Yeah, precisely. I mean, so because we are so much oil dependent and our imports of oil always exceed the exports of petroleum products. So clearly, I think oil prices going up in that sense expands our trade deficit as well as our current account deficit. And if oil prices were to reverse course, I think then that will become a worry.
Okay. What did you make of the other macro data? And, I also want a question on the Chinese data that came out, but before that, what did you make of the other macro data? We've had WPI, CPI coming in, not that they gave any surprise, and I believe all of that points towards giving enough ammo to the Reserve Bank of India to be more accommodative. What did you make of that data?
Yeah, absolutely. I mean, the growth is weak and so is inflation. So, and I think inflation, particularly WPI, has again fallen. I think it's to do with commodities there. But the key message there is that there is more room for the monetary authorities to ease interest rates, and I think the global factors also support easing of monetary policy in India because the most of the central banks have turned dovish, and the US is expected to cut rates this year itself. So in this scenario, I think we should see more rate cuts happening. I think, but the critical question at this juncture is not how much the RBI is cutting, but how much of it is getting transmitted into the system. So this is getting reflected in the deposit rates and in the lending rates in a very weak manner. So I think the transmission is quite anemic at this juncture.
Okay. One word, Mr. Joshi, on what do you make of the global data points as well? China's GDP growth numbers since they've started reporting this in this format that it is, clearly throws some indication of inward-looking growth. What would that do to maybe global growth? Because I think global growth and global demand will be a big factor of what happens to crude and the yields across the world as well.
Yeah, I think there is clearly the tilt of the risk is to the downside, whether it is China or it is United States or it is Europe. So particularly the Europe and US are still above their long-term trend rate of growth. So they will naturally move towards their long-term trend. And I think the China is I think doesn't have enough ammunition to fire its growth on its own. I mean, so maintaining around 6.2% is what we expect, I think, for 2019 for China, which is slower than what it has experienced in the past, but that's the new reality.
Okay. One last question, Mr. Joshi, anything in the Fed commentary that will come up soon, or the policy that will come up which could have a bearing on your view on how the macros are shaping up as well? Because I think what flows do as a result of policy rates in the US and Europe might be a big factor of what happens to currency and yields back in India as well.
Yeah, I think the global environment has been a mixed blessing. As we talked, the slowing of the world economy means less opportunity to export, but it also means the easier monetary policies in advanced countries, which I think which opens up channels for money coming into emerging markets, and India has been a beneficiary of that. I think if you scan over the last couple of months, I think the rupee has been appreciating, the foreign capital inflow has been strong, and I think that's permitted by softer monetary policy in the advanced countries. So I think a further rate cut would, I think it's already priced in by the markets, but nevertheless, I think as and when it happens, I think that will improve conditions for more capital to flow into India.
Thanks, Mr. Joshi, for joining in today and giving us that quick perspective. Really appreciate your time.
Thank you.
Well, speaking of markets, they're doing well. So after starting off with a bit of a lull, the bank Nifty is moving up. Remember, in the trade setup, we spoke about how selecting longs were being formed in banks in late trade yesterday, and that's leading to the bank Nifty doing well for the time being, 11,632. But could this be a false start of sorts, and can we succumb to some selling pressure in the second half of trade is the key question to be asked. Watch out for banks, watch out for Nifty IT. That was a big contributor yesterday. May not necessarily continue doing that in the days to come. For now as well, the Nifty is succumb to some bit of profit booking in the session.
All right, and with that, we wind down this show of Indian Open. From Neeraj, myself, and the entire team that's put this show together, thanks a lot for watching. But market action continues on the F&O show on the other side.